Hey guys, Andrew here from Learn How to Trade Online. Just wanted to do a quick video to talk to you about the current conditions in the US stock market, where things are at right now, where they're likely to go for the year ahead, and where your opportunities are to make money. So I'm looking at the S&P 500 right now, but I'm on a daily chart. I need to really throw it up onto a monthly chart to really give you an idea as where we're at. So this is a monthly chart with monthly candlesticks of the S&P 500 over, 20-year period pretty much. So this is back in 1997. We can see what's the remainder of the boom period there and the bust, the recession. We can see the boom and bust last time, 2008 and beginning of 09. And we can see through here now the boom that we've been in. Now, my concern is what's happened since October. And while I've been pretty much heavily short since at least middle of October, I think we are in the short term going to see a little bit of a bounce. Now, let's just look at where we are right now in the big picture of things. So ordinarily, in good times, in boom times, we tend to get moves of 7 to 10, maybe 11 years to the upside, followed by 1 to 2 years in absolute terror, going the wrong way, everyone's freaking out. And we've had now a 10-year bull market to the upside, and things aren't looking quite as rosy as they once were. Now, what's interesting is if you look at the actual market structure on the monthly charts, we do still have major higher low points. My concern with this is that I think this is the top of the market. Interest rates are rising in the US, have been for some time. Growth is, let's just do growth in a second, but unemployment's as good as it's ever going to get. Growth is looking like it's slowing down, and also house prices are slowing down / turning over. So in popular areas like California. So if we look at where the overall market is right now, you can't call this a strong market anymore, especially with what's happened since beginning of October. We've basically sold off, a bit of a pause right now. Now, I do think we are going to see some kind of movement to the upside in the short term. Bounces like this, dips usually get bought. I'm expecting that to happen. But the reason for the move up last time through here was all because of Trump's tax cut. Well, all of a sudden you cut taxes, then the biggest companies in the world make more money, therefore they have a higher stock valuation, and that's what caused the Nasdaq to move so much. That's what's caused this S&P to move so much to the upside. But we false broke above here very aggressively. We've got a new lower low, which is not a little bit of a lower low, it's a very obvious lower low. And I'm sure the trend line chartists could quite happily stick a trend line in there and say, everything's fine, don't know what you're talking about. Now, my concern is that strong moves usually indicate the shift into the new trend. So if we go and look back around 2000, we had the movement through here to the upside. It kind of stalled a little bit here. The movement down through there then led to the next move down and so on. Through here, 2007, 2008, oh look, false breakout leads to an aggressive move down, which is where I think we're at right now. Pulls back up again, and this is what I'm waiting for. I think we're in this phase here right now, just 10 years further ahead. I'm looking for this for the next big move down. Now, recessions are scary. There's nothing fun about them. From a purely personal perspective, people lose homes, people lose jobs, people lose retirement savings. It's a horrible, horrible time. But as a trader, it's an unparalleled opportunity to make money. Now, that's quite facetious is the right word, but it's quite a nasty thing to say. But purely from a charting perspective, the market moves so much more that in a shorter period of time, which is really what you're after. I mean, look at how many months it's taken to go, this distance here has been more than a year to go up to here, yet in 3 months we've wiped out all those gains. So typically in stock markets, the moves down are stronger than the moves up. They're more aggressive because greed tends to drive market to the upside, but fear pulls the plug pretty damn quickly. So with where we're at right now, my concern is that we've got this kind of structure playing out in the short term, and this is not going to be like a 1 year move up. We're really paying attention right now to what happens next, because once we get the first inkling of a lower high, I think that's it. I think the game's over. And you could look back on it in hindsight in 5 years' time and see a wonderful double top or a wonderful head and shoulders, but the point is right now, how do you trade this? Well, I think in the very short term, you have to consider being a buyer. Now, on daily charts, for me, the market's not there just yet. I'm not actively buying this yet, but I am keeping an eye out for it. But once we get the first monthly lower high, which could be 3-4 months time, might be 6 months time, but once we get that first monthly lower high, it's game time. And it's going to get pretty scary pretty quickly. So make sure that you're prepared for this move down. Don't think, I'll wait, and try it absolutely perfectly. I'll wait for it to go. You need to be in this to win it, because I was fortunate or unfortunate enough to start trading during the last recession, and I know how fast things can move. So from that perspective, you haven't got time to second guess yourself and go, is this the one? You've got to take a couple of losses potentially through there before you get it right, but the one that you get it right on, you stand to make a ton of money. Plus, you can add to your positions on the way down as well, which, when you look at it on a daily chart, really moves very, very nicely. So, that's the S&P. Now, the S&P is not the scary one. That's the one that everyone tends to look at, the S&P. But if you look at the NASDAQ, that's the truly scary one. The reason why I say that is I think we've got, on the NASDAQ at least, a recession coming that is equal to what happened in 2000. Which is very, very scary for stock prices. Now, you can see the previous boom on the way up. You can see the monster bust that we had afterwards. This was the 2000 boom, the 2007, 2008 bust, and this is where we are right now. Okay, so this kind of gives you a real idea as to how overinflated the market is at present. So this is where Trump got into office around here somewhere, and the tax cuts really fueled the growth here to the upside. The trouble is, this is a heck of a sell-off, and it's not a small sell-off. It's also not going to be something that just bounds back up again and carries on. This is it. So you're looking at a short-term move to the upside for the next 3, 4, 5 months, and then you want to be ready for the big move down, because this is going to happen fast on the NASDAQ. The NASDAQ's usually the first one to go. Usually the first one, purely because of the fact that tech stocks are the most volatile when it comes to recessions. And the reason why I say that, all of a sudden, in a recession, you don't need the latest laptop. You don't need the latest cell phone. And that obviously impacts tech companies very, very hard. Now, Tim Cook just said a few days ago that they've had to cut their sales forecast by 10% almost, because of China's weakening growth. Now, if Apple with the iPhone is experiencing a drop of 10% in sales, or a projected cut in sales, it gives you a real concern for the state of the Chinese economy. So we have to look at where we are right now as being a short-term move up, ready for that big move to the downside. Now, I haven't got enough data on this platform, unfortunately, but I can tell you now because, I traded through the last one, but I know that this pullback, this recession here from the previous move up, was an 80% pullback. This was just over an 80% pullback. And if we look at what an 80% pullback means for the NASDAQ, and I'm certain everyone will be saying, that can't possibly happen. It happens pretty consistently in recessions. Let's just whack on a 80% pullback. Just throw on a 786 on there. I think we could see the NASDAQ certainly come down to these levels, and the 80% level is somewhere through here. Now we're currently trading around 6,500. We were trading at 7.5 on the way towards 8,000. And I'm talking about prices moving down to 2,500, which is scary as hell. But when you look at the last few recessions, how much stock prices have sold off, it gives you a real idea as to why I'm saying that. Now, here's the next thing. The companies in the NASDAQ should not be valued at the rates they are. The valuations are just completely off the scale. So, when you've got Amazon that's just jumping up massive percentages each and every month up until recently, it's just not going to happen long term. And we're really starting to see the beginning of the recession here with this aggressive move down. Similar to last time, aggressive move down. So I think you've got 3, 4, 5 months to the upside. And then I think it's game time on the NASDAQ. And this is the one you really want to trade. Now that means you're looking for shorts, realistically somewhere around, what's that? Let's go with 6 3/4, so 67.50. Short down to certainly, I think 3,000 is the level to keep an eye on. All right, so yeah, we're looking at basically more than a 50% drop in the price of the NASDAQ as being very, very possible. So that's kind of my thoughts on the US stock markets, on the S&P, on the NASDAQ. I'm not going to look at the Dow because it is fairly similar to the S&P. I am going to look at oil though as well, because oil, some of the guys in my group have been doing really well since this monthly engulfing candle. We realized back here that this was worthwhile shorting and have made some good money on the way down. I kind of pointed this out to my group, and basically there's only been a couple of engulfing candles on monthly charts on crude oil, and these are the ones. So, this gives you an idea. This is an engulfing candle of the one before it. Fairly decent move down. Looks like we're, have done a similar thing here. Bearing in mind it is only the 7th of January today, so this month is far from over. Could definitely still move lower. And the time before was recession time. So I really wouldn't be surprised to see oil prices dropping even further than they have. I'm certainly not going to be a buyer at these prices unless it's for a very short-term trade. So oil is a bit of a scary one too. I also wouldn't be surprised to see oil ricochet around a little bit before it makes its big move. But again, similar to 2014, 2015. But just something to be aware of is that oil is far from strong. And when you look at gold, which on the monthly charts, if we look at where we are right now, since the US stock markets have sold off, gold's been getting bought. And if you whack that onto a daily chart, you'll get some kind of idea what I'm talking about here. So the beginning of the move down on stock indices was around the end of September, beginning of October. And you can see the move up in gold happening at similar times. Now that means that risk is coming out of the market. People are taking money out of stocks. They're putting it into commodities like gold. And you're also seeing things like the Japanese yen being bought pretty heavily as well. So this is the dollar going down in value against the Japanese yen. That's the yen getting stronger. So right now, what am I saying? It very much appears to be risk off. People are pulling money out of stocks, putting them into safer things like Japanese yen and gold. And when I say people, I'm talking about larger institutions here. This isn't you and me moving the market. These are big players. So if they're liquidating their stocks, and let's be real here, stick this on a daily chart and look at the NASDAQ. This is not little old you and me selling through here. All right, from the beginning of October when this first started, there's your false breakout. They're starting to liquidate positions. Here's some serious liquidation of positions. And you can see it, every single move down, there's more and more liquidation. Now, the reason that they were doing that towards the end of last year was because it was coming towards year end. You've made good money for the year. You want to finish ahead for your investors. Therefore, a lot of the institutions are pulling money out of stocks coming into the end of the year. And it's no great surprise to see a bit of a bounce here at the beginning of the year, especially after the move down just before the New Year's. But the reason why I'm saying it's not surprising to see a move up here is because there's a lot of long-only funds, so they have to buy stocks. So beginning of the year, new year, you may have cleared everything off your books last year, or if you haven't closed everything off your books, you've got capital you have to invest now, and you have to buy stocks. So it's not a surprising thing to see a bit of a pullback here, but I don't think it's going to be a major move to the upside. I think this is a short-term move up before we get the bigger move down. So, with the NASDAQ there, it's something to really, really be aware of. The NASDAQ's the biggest one that I've got my eye on the way down. Now, I haven't managed to make, I certainly haven't sold at the very top here and exited down here. Trades that I've had through here, I sold there, I sold there, I sold there, and I sold here. So, actually, tell a lie, I sold there as well. So these are the kind of the positions that I've had on the way down. I sold through here, got a 2-to-1, sold through here and lost, sold through here and got a 2-to-1, which is nice. I didn't sell anything towards the bottom of this move. I was waiting for the pullback. I wish, hindsight being the wonderful thing that it is, I wish I'd have sold this one, but I didn't sell that. I had to wait for the first lower high. Managed to get short here and made some good money out of that one. And I lost a trade here just towards the end, or beginning of the new year. But overall, 1, 2 losing trades and 3 big winners, I'm not going to complain. I actually had a cheeky short position back on up here as well, but that was a different style of trade. And my point is really now is that after this leg back up again, expect to see some kind of consolidation. Don't think you're going to have a big move up or a big move down from here. The market's going to kind of rattle around a little bit at this point and just kind of find its feet at the beginning of the year, typically consolidation, because no one really knows, no one really wants to buy as heavily as they have done previously. No one's going to sell after this kind of a move down. So expect it to do some kind of a wedge before it moves to the downside. Okay, so that gives you a real idea as to what to look for on the NASDAQ. Similar things on the Dow and the S&P. There's been some great moves on the way down that we've been able to capitalize on, but you really want to see a bit more of this, and then once this thing starts to go, it's that monthly major lower high, and that's your way in for the big move down. Okay, now I'm not saying sell right here. I still think there's a little bit more upside to come, but what I am saying is keep an eye out. That's the trade setup, particularly when you factor in longer term what's happening with interest rates continuing to rise. Unemployment cannot get any better in the US. It's like almost perfect. And you can see houses aren't selling quite as fast in certain states. You can see that some of the signals from last time are starting to show themselves. So just be aware when you're looking towards other markets like the FTSE 100 in the UK. They've already moved down pretty heavily, but Brexit is obviously a fairly big reason for that as well. So UK could really get hammered pretty hard this time. Only thing that's kept them buoyant really has been the lower exchange rates, really helped some of their international profits. But other than that, it's the FTSE's not strong at all. Really the Dow, the S&P, as I've already said, you're looking for a short-term move to the upside and a bigger term to the downside. Hopefully this video has been useful for you. If you're watching this on YouTube, then please do subscribe. If you're watching this on Facebook, then feel free to go and click like on the page so that you can follow and get more videos like this. And really make sure that you're staying safe in the markets, because we are at a bit of a turning point here. It is going to be dangerous to trade going forwards. You need to make sure that you use protective stops. You need to make sure that you trade using risk management, using a proven system that's worked through good times and bad. Now is not the time to jump in and guess what's going to happen next. You need to be following a rules-based approach so that when this market does roll over, you've got systems in place to capitalize on the way down. That's it from me. As always, stay safe in the markets, and I'll see you in one of my other videos.